Hey guys, what's up? Jeff Stockswinger just popping on for a quick little video on a Saturday night here. I hope everybody got out today, did a little calisthenics, maybe some jumping jacks, or went down to your local watering hole, whatever fancy you got. Hopefully you stayed away from the computer, laptop, stay away from them damn cryptocurrencies on the weekend too, right? Anyway, you guys, thanks a ton. Subscribers, likes, comments. Had a lot of interaction today on the video from last night. That was super fun. Had like 50 something comments in there. I got back with everyone. Super awesome, you guys. All I can ask for is a like and a subscribe. That would be super duper awesome. Just in case anybody forgot where we're at here, I found a quick little video I want to show you guys. I'm going to put the whole link in there with Mr. Jamie Dimon of JPMorgan Chase, the CEO of them over there. Talks about how he got in a huge, bad, ugly trade and lost about $6 billion when it could have been 500 million. And you can imagine where our boys over at Citadel are sitting here. But I'll play that for you in a second. It's only a couple minutes long. This was pretty cool here. This is just a breakdown of where we're at in case anybody forgot. I'm pretty sure you didn't forget, right? But let's just read through this real quick. This is pretty interesting stuff here. Hedges saw AMC in trouble, short heavy. AMC nears bankruptcy, heavier short. When a company goes bankrupt, money made shorting is all yours. You don't have to buy back. We know that, right? AMC infused $2.2 billion, no bankruptcy. When Mr. Aron recouped all that money and fired it back into the company. Instead of covering, and this will get back into the video I'm going to play here in a second too, hedge funds doubled down. Oh no. Ape movement held and grew. Of course it did. Number 6, hedge fund extort Robinhood and others not to allow buying, trying to create a huge sell-off. Well, how'd that go over, boys? Not real well, right? Apes held strong at 550. That was rough. Boy, that was rough. That's when I was in about 12, 14 bucks, whatever the hell I was, and I luckily averaged myself way down. So apes held at 550. We know that went on for, what was that? It seemed like a month. Okay, then congressional hearing. Robinhood exposed for selling order flows to Citadel. Oh, you poor little fellas. Closed at 8:01. We remember that. The old 8:01. Remember watching that? Anybody watch that at the timer? I felt like I had a $500 bet on a Super Bowl or something, watching that thing go down to the second there. Boy, that was fun. So 8:01, millions of shares expired in the money. When was that? It seems like 6 months ago, for crying out loud. Oh, yeah. Gamma squeeze kicked up. The DTC rule, we know that. Hedge funds spent over $500 million and only dropped 7 cents. 7 cents on 319. 7 cents. This will bring me up to another thing I want to share with you guys. Hold deeper. Dark pool OTC exposed. Yep, that was last week or whenever the hell it was. Credit Suisse turns back on a hedge fund. LOL at the end of it. CNBC and others report fake dilution, then send out correction 2 hours later. Apes held. Of course we did. Ape exposes repo tactic via shell company owned by Citadel. Hold deeper. Apes own 88% of AMC. And of course, Mr. Aron, CEO, says he's an ape. Frickin' outstanding. Then over here, this is a close of market on Friday, boys and girls. GameStop buy orders 15,000, sell orders 3639. AMC 5,094, sell orders 1764. This is about a 4-to-1 ratio here in buys to sells, and the stock price went down. What's going on there? I wonder. Manipulation? Yep, I think so. Jesus, Mary and Joseph. And then another piece of good news. Our boy Trey over at Trey'sTrades, interview confirmed. Aron, outstanding. That's going to be a big deal. I think the more, especially revving up into this week, and the more talk about that, just getting him on there. Like I said in the other video, if he just went on there and sat there, it's still, going to cause a lot of chaos and action. So that's super cool. A little bit with this here, manipulation like we know about 4-to-1 ratio there. The stuff we went over here brings me over to this little piece here. This is Mr. Jamie Dimon, chairman president of CEO or of JPMorgan, right? This is about 3 minutes long, you guys. I'm not going to play the whole thing. I'll put a link to this. I actually watched the whole thing here. It's about an hour long, but pretty cool. Listen to this just for 3 minutes here. And while you're listening to this 3-minute clip, just think to yourself, Citadel, how much trouble are they in? Hang on, guys. Here we go.
Under your management, JP Morgan's gone from strength to strength, but one incident stands out as a negative during your tenure. So in 2012, a London-based trader lost over $6 billion for the bank. Are there any lessons for us all in how you dealt with that incident, and do you wish you'd done anything differently?
Here's an example. I mean, this is what our country's come to, okay? We had a record profit that year. We're a big company, hugely embarrassing. I'll tell you about that mistake in a second. No customers were involved. Okay, it was originally put on as a hedge that obviously didn't work. Okay, and yet we were punished severely in Congress, $2 billion of fines. I mean, it's outrageous. It's just outrageous that a company makes a mistake. My shareholders got hurt by $6 billion. I hurt my shareholders. I apologize to my shareholders, and the government fines me $2 billion in addition to that because they can. Because they said it's another example of a bank being mismanaged, et cetera. Shit happens, and it was. We had put on a hedge that was supposed to earn a lot of money in a recession and basically break even in a normal thing and lose money in a booming environment. Think as we were short high yield and long investment grade, something like that. And it wasn't the complex derivatives that mattered, because the fact is that wasn't the mistake. The mistake was when we put this thing on. I thought, and I blame myself, and I went public right away. Big mistake, $2 billion, could be a lot worse. Bad strategy, barely vetted, barely monitored, barely done. My fault. I'm sorry. We're going to fix it. The details in some ways didn't matter, but it was hugely liquid. This typical thing in trading, by the way. When we had asked them to reduce the positions in half, I'd looked at some very simple numbers, risk-weighted assets. I should have asked a couple more questions. They couldn't do it. So instead of reduce it in half and saying, hey, we have a problem, but if they'd said that at that point in time, we'd have lost $500 million, you probably wouldn't even known about it. But instead of that, they kind of doubled down. They tried to come up with these old cockamamie ways to reduce the risk, but they just added more and more liquid positions on top of other liquid positions. And when you try to unwind that thing, that's how you get killed. And so, but the lesson, there was no lesson to me. I knew the second it happened. I've seen it before. I got the whole management team together, all the PR people. I said, guys, they're going to come after us. They're going to say JPMorgan's like everybody else. Big banks are too big to manage. Jamie Dimon's a failure, just like these other guys. He's off his highly holy horse. Diamonds do break. Diamond in the rough. I wrote all the headlines. I said, forget all of that stuff. We're here to serve companies, serve clients. We're going to do our jobs, and hopefully the attack and when something like that happens, and a lot of you have been through this, that is a letter to every AG, to every newspaper, to every senator, to every congressman, and they all attack. Literally like a bunch of barking hyenas. And yet we all look at it like that's okay. Well, it's not okay. It's not the way professionals, people should act when companies have problems and stuff like that. So, so the fact is there was no great lesson learned other than for all of you, whenever you have a problem, and I say now Zuckerberg's got one, that's what he's going to deal with. I'm not sure he completely understands that. Every AG, every senator, every congressman, they'll turn immediately, they'll go on the attack, they'll take advantage of it. I'm surprised they're not talking about fining them billions of dollars yet. And so, and that's what society is. You just have to learn how to deal with that stuff. So, the biggest risk of all, the risk committee, so we obviously bear risk all around the world. That risk committee, which was meeting, had our senior risk officer on it. When I asked, what about this trade? They said, oh no, that trade was done pretty much between the bunch of those traders who were doing it and Ina Drew, who's our CIO, who I respect. They didn't want to share the risk committee. That should never happen. Ever, 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 ever. Okay, our risk committee see everything. My general counsel sees everything. My head of compliance sees everything. Once someone ever says, well, that we're going to do over here, you got a problem. And that tends to create an issue that will come back and haunt you.
To explore leadership in...
Oh, boy. Everybody go to bed tonight dreaming of Citadel losing their shorts. I think they're in deep trouble. So yeah, guys, that's it. That was pretty cool. I'll put a link into that little clip there from YouTube with Mr. Jamie Dimon. Thanks, guys, a ton. If you can just like the video, subscribe if you would like to, would be super duper awesome. Leave me some comments too. I'll get back with everybody. It's pretty fun going back and forth with all of y'all. So that's it, guys. One more night of rest, and then we got the market firing back up in about, hold on, 25 hours and 19 minutes from my time here in beautiful, lovely, scenic Seattle, Washington. Awesome, guys. Thanks a ton. Appreciate the support already on the channel. It's been super fun, and we'll talk to you next time.